Viewers, welcome to this episode. My name is Sunday, and I welcome you to Against FX. Today we have another interesting topic, which I'm going to be sharing with you guys. And I hope we are following up based on the materials released so far. All right, like I promised, every day, back to back, there will be a video for you to start building yourself towards learning how to trade Forex. All right, this is what a lot of people paid money for. But here am I giving it out free of charge. All right, I want to help you build the foundation. All right, I'm talking to those who are interested in learning how to trade, or if you are already a trader and you started with just pursuing the goal instead of focusing on the process, is an opportunity for you to, go back and really learn the basics of trading, forex trading, right? All right, that being said, all you need to do is go to your YouTube channel. All right, all you need to do to be part of this, go to your YouTube channel, open your YouTube channel, search for Against FX. All right, Against FX. Then you subscribe. Once you have subscribed, the next point is for you to go to my playlist. You see a playlist, click on the playlist. Then from there, you select beginners free course. You see all the video. Instead of you scouting for video here and there, I took my time to create a playlist for it. So you start from 1, 2, just continue to watch the videos. And as you do, you are just finding your way to become a forex trader. All right. So that being said, and apart from that, click on the bell sign. All right, so that once a new video is uploaded, all right, or uploaded, you'll be the first to be notified. All right, so sit tight, grab your pen and your paper so that you can take note. All right. So today we are going to be treating the topic I titled Types of Currency Pairs and How You Can Trade Them. Types of currency pairs. Because in Forex, we trade currencies, all right? What do we mean by currencies? Like Euro USD, GBP USD, or GBP JPY, or Euro JPY, or US 500. You can see it here, the US 500, or you can trade gold USD, Euro USD, Euro JPY, and others. So in trading, if you want to buy an asset, if you want to buy currency, all right, they usually comes in pairs. What do we mean by pairs? So that we won't get confused. Two currencies at the same time. Imagine, for example, you are in Nigeria, okay? Let's use Nigeria as a case study. You are in Nigeria. In Nigeria, we use Naira, right? Then you have Naira and you want to buy, you want US dollar, All you need to do is to give out your Naira, all right, for you to be able to have dollar with you. That is, you have exchanged your Naira to dollar, all right? And what will happen is you are going to pay the dollar equivalent for you to have the dollar. If, for example, $1 is 1,000 or 1,500 naira, that means you need 1,500 naira for you to be able to have $1. So you give out $1,500 for you to have $1. So as a result, two currencies have exchanged hands. You are giving out naira, somebody is giving you a dollar. That is Forex for you. Or an example, you are in US, you want to travel to Europe, all right? In US, they spend US dollar. In Europe, we spend here euro as a currency. So you now move from US and you are coming to the euro. All you need to do, as soon as you get to the airport or anywhere you can exchange your money, because in Europe, we spend euro here. So in US, they spend US. So you have US dollar with you. As soon as you get to the airport, because you cannot use your dollar to enter supermarket and buy things. No, it's not a legal tender here. We don't spend dollars here. It's euro. So for you to be able to get to the supermarket to purchase things as soon as you arrive here, all you need to do is that you take your dollar, you exchange it for naira. All right. It then means that the amount that euro costs, the value of €1, you will now give your US dollar in exchange for that value of the euro as a currency. So once you do that, you have just traded. That is Forex for you. All right? That is Forex for you. You remember Aboki way back in Nigeria? They always have different currencies, right? They trade Forex, but in a physical form, not in a digital form. They trade Forex in a physical form. They always have different currency with them. All those Aboki, those we call Aboki, way back in Nigeria. So when you have any currency with you, maybe dollar or euro or pound, you don't want to change pounds to naira, you give them your dollar or you give them your pounds, they will give you naira equivalent. So those people, they've been trading Forex for a very long time. All right? And now if maybe you travel to Nigeria and you want to spend naira, you go to Aboki or you go to the bank. I'm very sure majority people go to Aboki because black market, the exchange rate is high because it's not regulated. If you go to bank, they have official rate. So most people, majority, goes to Aboki to exchange their currency. So you call Aboki, you tell Aboki, okay, I have $100 or €100 or £100. Give me naira equivalent. Aboki, you'll be surprised that you tell Aboki, okay, this is the exchange rate now. The Aboki will tell you this is the current exchange rate that he is going to buy your. Aboki is going to buy your dollar, euro, or pounds that you brought. You are now going. Is now going to sell. What do you call it? You are the one selling your own currency. That is, let's use euro as an example. You are selling your own euro or your dollar. He's the one buying it and is now selling naira to you. So you give the Aboki your dollar, and the Aboki will give you naira equivalent. You have just traded Forex. You have just traded Forex. Maybe when you now want to go back, okay, you still have naira with you. You tell them, okay, take this naira, give me a dollar or pounds or euro, as the case may be. Aboki will now give you naira again. Aboki, you carry naira and give to Aboki. Aboki will sell, Aboki will give you pounds or dollar or euro because you want to go back to your country. Because you know that if you take naira to your country, you will not be able to spend that naira. That is just trading. That is Forex for you. So you now discover that at every point in time, two currencies will always exchange hands. All right, that is Forex for you. Now I'm going to be showing you guys a few slides so that for us to really get the understanding. All right, just bear with me. We have what we call base and quote currency. Base and quote currency. Now, every Forex trade involves a currency pair. Like, for example, Euro USD. Euro USD is a currency pair. All right? Just like, for example, you have your Naira and you have dollar, you want to exchange your dollar for Naira. So at that point is your dollar and Naira that are the currency pair. Or you want to exchange your pounds to Naira, at that point is your pound and Naira that is a currency pair. All right? I hope it's very clear. Here is how it works. We have the term and meaning, all right? We have base currency. In those two currencies, one is a base currency and the other one is a quote currency. Now, what is base currency? The first currency in the pair is usually a base currency. Now, for example, we have the euro and the USD. So if the first currency in a pair is the base currency, automatically euro is now the base currency, and we have quote currency, meaning that the second currency in the pair, for example, we have the euro USD again. Now, the quote currency will now be the USD. All right, it's very clear. Don't get confused. The first currency in a quote, in a pair, two currencies, Euro USD, the first currency is the base currency, Then the second currency is the quote currency. In this scenario, Euro is the base currency, USD is the quote currency. Now, the exchange rate tells you how much of the quote currency is needed to buy one base currency. Just like as I've explained to us, if I have euro and I move to Aboki, or I move to where I want to exchange I want to change my own currency to another currency. If my currency is higher, let's say if USD is higher than Naira, automatically USD is the base currency, while the Naira is the quote currency. So the quote currency now, all right, the quote currency is needed to, how much is the base currency, all right? Now, exchange rate tells you how much of the quote currency is needed to buy one base currency. If 1 euro or 1 USD is 1,500 or 1,800, as the case may be, you need that 1,800 naira for you to be able to have 1 unit of, for you to be able to have $1. So exchange rate tells you how much of the quote currency is needed to buy one base unit. I hope it's clear. Then the example, if euro USD is equals 1 euro 10 cents, all right, it means 1 euro is equals one euro, 10 cent US dollar. You need this 1.10, that is 1 euro, 10 cent, for you to have 1 euro. You need 1 euro, 10 cent as a dollar for you to be able to have 1 euro. All right, because in this case, euro is higher than dollar. So you need the value of, for you to have 1 euro, you need $1, 10 cents for you to have 1 euro. These are just textbook example, but in the real world, that is how it operates. Now we have currency pairs, and we have the type of currency pair. We have the major currency pair. This includes the US dollar. Any pairs that includes the US dollar and are the most traded, offering high liquidity and low spread. All right? Leave liquidity, leave spread. We are going to touch on that much later so that you won't get confused. So let's just treat currency pair. We have Euro USD and we have USD JPY. So we have the Euro and the US dollar. And this one we have the USD JPY. JPY is Japanese yen. JPY is Japanese yen. So you cannot go and start typing Japanese yen. No. When you want to trade, if you log into your MetaTrader 4, for example, or your trading view, once you click here where all these things here, click on plus sign, you will see all those things. If I say USD JPY, for example, you see United States dollar and Japanese yen. If I want to add it to my list, I will just click this plus sign, is already added. So this is how, for you, these are the codes, currency codes, for you to trade. This is how it is paired, Euro USD. And we have USD JPY. That is, the JPY is Japanese yen. The JPY is what? Japanese yen. One moment, just responding to a message. So USD JPY, the JPY is Japanese yen. We have the GBP USD, that is the British pounds and US dollar. We have the USD CHF, that is US dollar Swiss franc. We have AUD USD, that is Australian dollar US. All these are currencies, country currencies. So if you want to trade any country currency, this is how you are going to pair them. All right, this is how you are going to pair them. All right, AUD USD, that is the Australian dollar, then plus US dollar in quote. USD and CAD, that is US dollar and Canadian dollar. All right, all these things you know. All right, after that, we have the major and the minor currency pair. We've just treated major. Then now, so this one here, let me remove it. There's one with the, I didn't show you guys. Oh, one moment. This one I did not show you guys. That is the the NZD USD, New Zealand dollar and US dollar. So sorry I skipped that one before. So I will just bring it up. So these are the major currency pair. All right, endeavor to study this thing very well because this is how you are going to be trading. If you want to trade, once you open your chart, you select any currency pair of your choice. But mind you, you cannot be trading anything. At most, I will even advise as a beginner, you start with one currency pair. As I say, one currency pair, if it is USD JPY that you want to start with USD JPY, master that. Anytime, that means anytime you want to trade, you always trade USD JPY. Anytime you want to trade, anytime, any day, you are trading USD JPY so that you master how it fluctuates, how it moves, and all that. Once you have mastered that for a very long time, you can now add another pair, making two. You cannot be trading everything, it's not possible. If you are just trading everything, you will not master anyone. So that is just it. So it's good for you to know how to group them anytime you want to trade as a forex trader. Then the next thing here is the next one is the minor. Minor. We have the major and we have the minor. Now, the minor, this type of currency pairs don't include USD, but involve other major currencies. If you look at it, you will not see, look at the list, you will not see USD. So it's very clear for you to understand it. That is why I put it this way. It does not involve USD. The minor currency pair, you will not see USD in any quote, in any pair. Now, it's euro against British pounds, euro against Japanese yen, British pounds against Japanese yen, Australian dollar against New Zealand dollar, Swiss franc against Japanese yen. These ones, they are minor currency pairs, all right? Minor currency pairs, all right? So we have exotic currency pair too. Exotic currency pair. Guys, I urge you guys, any video I drop, you need to master it. Watch it. It's not African magic. Don't just sit down and just watch it as if you are watching African magic. Get a pen and a paper. All right? You just default yourself into a learning mode so that you understand what is going on. And after that time, when you put on the video, don't avoid any distraction because you are learning. You are learning something. All right, you're trying to acquire knowledge. All right, so exotic currency pair. This pair, this pair, a major currency with one from an emerging or smaller economy. They are less liquid and more volatile. Liquid and volatile, leave that alone. I don't want to dive into that now so that you won't get confused. Focus on the currency pairs, how to pair them. All right. So we have the USD TRY, that is the US dollar and Turkish lira. Then we have the USD and SEK, that is the US dollar and Swedish krona. We have the euro and Polish zloty. Then we have the USD South African rand. Then we have the USD Singaporean dollar. These are the exotic. So we have the major currency pair, we have the minor currency pair, and we also have the exotic currency pair. So this is how you pair currencies for you to be able to trade them on any platform. I hope we really understand this, okay? So, and another thing I want us to understand right now is that once you have been able to group them, what you want to, no, it's not as if you now come to your platform and start grouping them, merging them together. No, it's a simple thing. If the platform you are using, for example, if it's a trading view, right now I'm on trading view. All right. Right now I'm on trading view. All right. I'm on trading view. All right. Then all you need to, or if you are not using trading view, even if it's even if you are using MetaTrader 4 or MetaTrader 5, which is that one is the newest version of MetaTrader 5. If you're using MetaTrader 5, it's still the same thing. Go to where your currencies are, then click the plus sign, everything. Then it will tell you add symbol. Add symbol. The symbol, under symbol, you see they are already grouped. They are already grouped. You see BTC USD, Aussie euro, that is gold and euro. We have gold versus dollar. We have US dollar versus CAD, British pounds, US dollar, everything. There are so many. All right. All you need to do is select one. Once you select one, the chart will open. Let's say we go to Euro USD. All right. Euro USD. As I've selected it, the chart you see now is Euro versus USD. And like as I've taught you guys, the first one on the left is the base currency, while the second one on the right, that is the euro, the USD, is the quote currency. All right. Now, all you just need to do after this point is now how do you now trade? All right. How do you now trade? That will now take us to another episode. I don't want, like if I promise you guys, I don't want to overbore you guys with loads of information. Every video, I make sure I simplify it and make it simple and cool for us to always follow. Because if you jam-pack everything in one video, some will not even have patience to want to watch the video and the ability to even assimilate because of worry of life and all that will not be there. So we are breaking everything down for us to understand. I told you guys it's going to be a one month crash course. You're not paying anything. All you need to do is go to my YouTube channel Against FX, subscribe. All right? Subscribe. Once you subscribe, go to my playlist. There's a playlist. Click on the playlist. All right. Click on the playlist. Then you go to beginners free course. Click on that. You see the video for this crash course. You just be watching them. Take note, and before you know it, everything, before you know it, you will start trading. I'm telling you, gradually now, you know what currency pair is all about. You know what base currency is all about. I've showed you what quote currency is all about and how to pair them. All right. So as simple as that, we are going to stop here. Then the next episode, I'm going to be teaching you guys market orders. Those ones now will I just want to launch you guys into how to place a trade. Now you know currency pairs, all right, that are going to be trading. You now have the instrument with you. You know, okay, if I want to trade Euro USD or USD JPY, I will just choose one. Okay, once I've choose one, the chart will display. Once the chart is displayed, I know that, okay, this is Euro USD. The one on my left is the base currency. The one on my right is the quote currency. Okay. The chart, I understand the chart because a bullish market has a characteristics of creating highs, lows, highs, hold low, it will go higher, come down, go higher again. Now, if it's a bearish trend will create a low, create a resistance pullback, push below again, create a low like that. And you know when a trend is about to change, you know where break of structure and all that. You know where support and resistance is all about. You know that a resistance, that is where sellers will wait for price. As soon as price gets there, they enter the market to bring the price down. Support is where buyers will wait for market. As soon as price get to that level, they enter to push price up. You already know all those things. So the next thing now, the next episode is for me to now launch you guys into the types of market order. Once you know the type of market order, the next point is for us to now know we apply what we call lot sizes, how to manage your risk, and how to adjust your lot sizes and all that. You must know, because if you have 100,000, you cannot just carry the 100,000, go and put it inside the market. Or even if you have it in your account, you cannot use everything to trade once. So you need to have the knowledge to first adjust your lot size, because that is what will now determine how much you want to risk, how much you want to invest at that particular time. So through your lot size and the different from your entry point to your stop loss, you will now know, okay, if my stop loss gap is too much, the pips, if it's too much, that means it's not something I should enter at that point. So I always want I always want a situation whereby before I enter a trade, I always know that my stop loss should not be more than 20 pips. My stop loss should not be more than 15 pips, 15 pips. So you must know all those things. All right. So don't worry, all those things I'm going to teach you guys for free. Right? I'm not charging anybody, for free. The only thing you need to do is subscribe to my channel, hit the like button, share the video. All right? Share the video, because there are millions of people who are interested in learning how to trade. They don't know how to go about it. So you have an opportunity to know this channel. So please share it to others. All right, like and comment. And if you are having any difficulties understanding anything, please drop it at the comment section. I will even make video on it then to explain better. So on this note, I thank you guys. I see you again in the next episode. God bless you.